How do you earn $40,000 a year in dividend income? Is it possible? Our dividend income strategy is extremely crucial to our early retirement. We have exactly 9 years until we reach our fat fire number at $2.8 million, and $1 million of that is going to come from our dividend stock portfolio. So here are the questions I needed to ask myself. How do I generate $3,300 a month in dividend income that can pay for our basic expenses when we're in early retirement? What are the tax implications for dividends? How do I build my dividend stock portfolio to reach $1 million? If you're brand new to my channel, welcome. My name is Sai. I'm going to go over 3 things in this video. How we pick dividend stocks, how much we're going to pay in dividend taxes, and how much we're investing into our dividend stock portfolio. The very first thing we had to figure out was our basic annual expenses. I'm talking about the essential expenses, so things we absolutely need to survive every month, and that number is $3,300 a month or $40,000 a year for us. And that number includes our mortgage payments, other housing expenses, insurances, utilities, transportations, and communications. I'm not including any savings, investments, or business expenses. This is strictly what we need to survive on every month when we don't have our jobs. Which leads to the next question, and that's how much we need to invest into our dividend stock portfolio to generate $40,000 a year in dividend income. The first thing I look at is how much dividend yield my portfolio will generate. So my dividend stocks pay out their dividends every quarter. Now, most investors have dividend stocks because they have historically outperformed the S&P 500 with less volatility. Dividend stocks can give you not just dividends, but capital appreciation of the stock price over time. And what we've been doing is buying and holding dividend stocks and reinvest our dividends directly back into the stocks. Our goal right now is to reach $250,000 total in the dividend stock portfolio. Initially, we had $50,000 with 5 stocks and $10,000 each. When we get to $250,000, we'll have 10 stocks with $25,000 each. And when we eventually get to $500,000, we'll have anywhere between 15 and 20 stocks. And when we reach $1 million, we want to have $50,000 in each stock. If you're brand new to investing, you can always search for dividend aristocrats and dividend kings. A dividend aristocrat is a company that has been paying and increasing dividends for at least 25 straight years. Some of the dividend aristocrats are companies like Chevron with 4.1% in dividend yield, Clorox with 3.2%, and Franklin Resources at 3.7%. And before you say anything in the comment section, I don't own any of these stocks. And a dividend king is a company that has been paying and increasing dividends for at least 50 straight years. And some of the dividend kings are companies like 3M that pays 3.7% in dividend yield, Johnson & Johnson with 2.5%, and Target with 1.7%. Let me quickly tell you how dividends work in the stock market. And if you're already familiar with it, you can just go ahead and skip to the next chapter of this video. Say you buy 100 shares of a stock for $10 each, that's a total of $1,000 you invested. If the company pays you 3% dividend yield or 30 cents annual dividend per share of stock, then you get paid $30 every year for owning shares of this company. Since most companies pay their dividends every quarter, then you'll make $7.50 in January, April, July, and October. Some companies will pay you in different months like in February, May, August, and November. You can always go to their investor relations website to find out what their dividend payment schedules are. Ideally, we want to have at least 4% average in dividend yield in our portfolio. By the way, you can get our free fire resources by visiting firesidechat.com/contact. You can also check out the Fireside Chat shop, and I have all of my stuff on my bookshelf at firesidechat.com/shopping. So let me go backwards here. So we figured out that we need $40,000 to pay for our basic expenses. We want to have 4% in annual dividend yield. In order to get paid $40,000 from our dividend stock portfolio, we need to divide $40,000 by 4%, which equals to $1 million. Going back to my investment chart, we're going to have at least 20 different stocks paying us a total of $40,000 a year. So how much do we need to invest every month to get to that level, and how long? We can control how much we contribute to this portfolio, but we can't control how the stocks perform. And no one can tell you how the stock market will perform in the next 5, 10, or 20 years. However, just by reinvesting my dividends right back into the stocks, that's already a 4% return. And even if the stocks only perform at 5 to 6% in capital appreciation, that's a total of 9 to 10% every year. So assuming I make 10% every year, and that's the best case scenario, right? If I contribute $2,000 a month or $24,000 a year, I'll hit the $1 million mark in 15 years. And let's say I don't have that much money to put away into this portfolio every year, and let me reduce it to $15,000 a year. It would take me another 4 years to reach the $1 million mark. But if the market only performs 8% on average every year, then it would take me an additional year to reach the $1 million goal. If I want to reach $1 million faster, then the only course of action here is to contribute more. The other thing I pay very close attention to is the earnings calls for these stocks. And if you're brand new to investing, these companies file 10Q, which is the quarterly financial statements, and 10K, which is the annual ones. And what I especially pay attention to is the dividend payout ratio and the dividend yield. A healthy company pays about under 60% of their earnings to their shareholders. Just because a company pays 9% or 12% or 15% in dividend yield, it doesn't mean that they're in a healthy financial state. Let me pull up a company for example. Let's take a look at 3M. Their dividend payout ratio is 61% and they're paying about 4% annual dividend yield. Their payout ratio to me is considered healthy because they're not overpaying their shareholders with their earnings. What I like to see here is a company growing over time, and they need to reinvest back into their company with earnings. Sometimes you'll see a company paying like 90%, 95%, or even 110% of their earnings to their shareholders. In my opinion, these companies are not sustainable, and they'll most likely cut dividends in the future, like AT&T. The healthy range for me is under 65%. Unless you own a REIT, then that's a different story. And that's my threshold to own any stocks. If it goes above that threshold, depending on the company's outlook, I'm most likely going to sell the stock and buy something else that's more profitable with the long-term growth potential. I made a video about my dividend stock portfolio about a year ago, and I'll put that link in the description below. And in full disclosure, and I like to be as transparent as possible on my channel, we've owned Raytheon, Realty Income, Verizon, Walgreens, and JP Morgan Chase. I recently added Pfizer as our stock number 6, and its payout ratio is about 40%, and the annual dividend yield is about 3.25%. I like the direction this company is heading in the next 3 to 5 years just by reading their earnings reports and listening to their conference calls. And I'll continue to pay attention to their EPS, revenues, and their net profits every quarter. And just keep in mind that none of this is financial advice, and I'm just sharing what I own in my portfolio, so please do your due diligence before buying any securities. But if you need help with creating a budget, debt payoff plan, or you want to know how to increase your savings rate, you can schedule a free one-on-one 20-minute financial coaching session by visiting firesidechat.com/coaching. And the last thing I want to touch on is taxes. Everybody loves paying taxes, right? And keep in mind that I'm not a CPA, so if you have a complicated tax situation, you need to find a CPA. So if you're investing in dividend stocks with a tax advantage retirement plan like 401k or IRA, then you don't need to pay taxes on the dividends. We're building our dividend stock portfolio in a taxable brokerage account because we're looking to retire as early as at age 45. While we're building this portfolio, we have to pay taxes on these dividends every year. Most dividends are classified as qualified dividends or ordinary dividends, or some people call that non-qualified dividends. Qualified dividends are taxed at a rate of 0 to 20%, which is significantly lower than the ordinary income tax rates at 10% to 37%. Assuming our beloved government doesn't raise taxes, these dividends have their own tax bracket. So if you're single and your taxable income is less than $42,000 a year, or if you're married and your taxable income is less than $84,000, then your tax rate is 0%. And most people will pay about 0% or 15% unless you're making over $460,000 a year. So let's say a company paid me $1,000 in qualified dividends in the year 2022, and I'm filing my taxes as married filing jointly. With our taxable income, we will have to pay $150 in taxes to the IRS. However, if I own a stock that pays ordinary dividends, like my realty income stock, then I will have to pay those dividends with ordinary income tax. And let me use the same example here. And if a company paid me $1,000 in ordinary dividends, and if we made, we'll just say $100,000 in taxable income, then we will have to pay 22% in ordinary income tax for that $1,000, which would be $220. So our goal is to minimize our taxes during our early retirement. We'll continue to invest in dividend stocks with tax advantage brokerage accounts like our Roth IRAs. When my wife and I are retired, assuming we're still married, right, honey? We're still gonna be married. If our total taxable income is less than $84,000 a year, then our dividend tax rate is at 0%. So that $40,000 a year we'll withdraw from our taxable brokerage account could be taxed at 0%. That would be wonderful, right? So we just need to make sure that by the time we're retired, we have our finances in order so we're not paying outrageous amount of taxes to the government. While we continue to contribute to our dividend stock portfolio in a taxable brokerage account, we're always going to prioritize our retirement accounts like TSP, 401k, Roth IRAs, and HSAs. We're going to stay debt-free and be intentional with every dollar we save and every dollar we spend. Our FIRE checklist is to help you get your finances in order. First, calculate your financial independence number, and I would start with figuring out your baseline expenses like your housing, transportation, food, and utilities. Whether your FIRE expenses are $40,000 a year, $75,000 a year, or $100,000 a year, this FIRE checklist will help you achieve your goals. And I can give you solutions to your math problems, but it takes you and only you to act on solving your problems. If you want to know more about dividend investing, be sure to check out these two videos. So with that said, I appreciate you watching my video. Don't forget to subscribe, and I hope to see you in the next video. Have a good one.